This is the analysis of Kenya Finance Bill 2024. These are just the major changes that you should be aware of. So in just like summary form, look at that. The corporate tax changes. So in terms of the corporate tax changes, this what we call minimum top-up tax. So it's going to be 15% tax on the resident entities. That is like Kenyan organizations, okay, in multinational groups with annual turnover of these euro 750 million euros or more. Next we have the withholding tax. So the finance bill suggests that supply of goods to public entities, so there's going to be a withholding tax of 5% for non-resident without permanent establishments, so like foreigners doing business in a country, and 3% for Kenyan citizens. So I don't know, probably last year's it was a bit lower. So look at this. So withholding tax in terms of supply of goods to public entities, you will be taxed 5% non-resident, 3% for Kenyans. Digital content and online services, 20% for non-residents and 5% for Kenyan content creators. So that is why the content creators actually disagreeing, like they saying it takes a lot of resources and effort even to come up with this content actually, and they'll still be taxed. Yes, these are Kenyans who are really trying to make ends meet. Boards and not interest, there will be 5% on interest from boards, 5%. And remember, you're talking about withholding tax, okay? So it's going to be 5% from boards and notes with at least 3 years maturity. With at least 3 years maturity for infrastructural funding. So even infrastructural bonds, which are currently at zero rated, they are not charged. They are going to incur a charge of 5%. Shipping and air transport increased from 2.5 to 3% for foreigners and etc. So this actually is going to increase the cost at which we as residents actually buy these goods, because once foreigners and are taxed, the interest is taxed. Mostly the businessmen, they transfer the charge to wananchi, so the end users. So in terms of investment deduction on spectrum licenses, there's going to be 10% annual deduction on capital expenditure for spectrum licenses, okay, applicable to telecommunications operators. So 10%. At the end of the day, the common mwananchi, all these taxations, they are always pushed to the end users. It's always pushed to the end users. Let's talk about individual tax changes, what this finance bill is proposing. So tax deductible contributions, so will be contributions to the social health insurance. This is like a new scheme that is being developed by the government. Social health insurance fund, affordable housing. Remember, this one was kind of suspended by the government, but it's still being charged from people's pay slips, and post-retirement medical funds deductible. So employees, you're going to be deducted much more. In terms of interest income, taxation of interest income from infrastructural boards. This is like a big blow. Like initially, infrastructural boards, people are waiting to invest in this because they had like no withholding tax. They had zero withholding tax. Currently, if this bill goes through, they'll be charged 5% for resident, and non-resident income remains exempt, so foreigners will not be taxed. Per diem and non-taxable benefit, elevation of per diem policies capped at 5% of someone's gross monthly income. So I don't understand if previously probably the per diems probably the rate was much higher or much lower. So, I would like to know that on the comment section. As we proceed, give this video a like and a subscription. Now, in terms of per diem, the non-taxable benefits threshold increased from 36,000 to 48,000 annually. Okay, so if you are falling below 48,000, probably you may not be taxed. Meal allowance limit increased from 48,000 to 60,000 annually. So I think this is something positive. In terms of VAT adjustments, in VAT registration threshold increased from 5 million to 8 million. Someone can inform us in the comment section what this means. VAT registration threshold increased from 5 million to 8 million. I don't know the people who own organizations properly. This is kind of going to make businesses like really quite some task. Like if you have to apply for government approvals, you maybe need to show your returns, not returns but business volumes from 5 million to 8 million. Okay, so VAT on financial services, deletion of VAT exemptions on issuing credits and debit cards, deletion of VAT exemptions. So the cost of acquisition of debit cards is going to increase because these ones are actually going to be taxed. Debit cards, credit cards, foreign exchange transactions will experience more increased VAT, and other financial services sector. So mostly in the banking and other financial services sector, the VAT is going to be much more higher. Tourism sector exemptions, removal of VAT exemptions on goods and services for constructing tourism facilities. This is on a good note. If you show probably like you want to offer hospitality or tourism facilities, so this is in a way to encourage the tourism sector in our country. VAT on betting, gaming and lotteries, deletion of VAT exemption. So betting, gaming, lotteries, they are going to be much more expensive, making these services subject to 16%. Previously, betting, gaming and lotteries, they were not on any VAT, but currently they are going to be charged. So this is something negative. So in terms of capital gains tax and digital marketplace, so there's going to be 5% rate for firms certified by the Nairobi International Financial Center Authority. Capital gains is like incomes or appreciations of assets and etc., with investment threshold lowered to 3 billion over 3 years. Okay, so guess this is something that most corporations don't want. Okay, and digital marketplace expansion, inclusion of ride hailing, food delivery, freelance, professional rental, task-based services. There's going to be taxation on that. Other tax reforms, the bill proposes a significant, what we call significant economic presence tax, replaces digital services tax with a 30% tax on deemed taxable profit for non-resident digital service providers. So there's going to be a 30% tax on any digital services rendered, especially by multinationals or non-residents or foreigners. The motor vehicle tax, this is what most people are actually against. The bill proposed 2.5% annual tax on vehicle value. When you are renewing your car insurance, every time you have to subject your car on, you have to value your car, and you're going to pay 2.5%, though these are kind of the MPC that this was dropped. Minimum Kenya shilling. So regardless of your value of your car, and if it's an old car, if the third party insurance is something like 7,000 or 8,000, you are going to pay 8,000 plus 5, which is 13,000 to a maximum of 100. So these actually the rich benefit more. Like anyone who buys a car of 30 million pays 100,000 on top, and anyone who buys a car of like 1.5 million still pays 100,000. So the sometimes it's if you know, these away MPs have a way of making sure this some of those clauses still sneaks back into the document, even if on the face value they see that they are scrapping it. So this is something really negative, especially for motor vehicle owners. It's like owning cars currently would be very expensive. Next, we have what we are calling advance pricing agreements. So induction of advance pricing agreement to manage tax compliance and dispute for related party transactions. So family trust, look at this. Removal of income tax exemption on income earned by the registered family trust, applicable on property transferred to family trust. So the way people have been transferring wealth for their generations and etc., there's going to be taxation on that, right? Compliance and administrative measures, objection decision period. So this one has been increased from 60 days to 90 days for KRA to issue an objection decision. Probably some people needed more time, okay, which that is something positive. Pension contribution limits as per the proposed bill, increased from that shillings per month to increased to 30,000 shillings per month from 20,000. Remember, this is the maximum contributions on a voluntary basis that someone can actually transfer from their salaries to pension fund. So initially people would like be allowed by the government to write a direct debit from their salaries to their pension fund to a maximum of 20,000. This one has been increased to 30,000. This is something good. However, even that money whereby Kenyans increase their salary, increase their voluntary contributions from 20,000 to 40,000 to 30,000. Where is even that money when even the cost of living is so high? So broader economic implications, economic and fiscal impact. Increased tax burden potentially reduces the purchasing power. That's true. The more taxations you include, most of the people, like even like 70%, they will not be able to purchase most of these things, and raising business costs. And remember, when entrepreneurs raises their business cost, they increase the selling price, and the consumers, in terms of their purchasing power, is greatly reduced. Efforts to align Kenya tax system with international best practices, that is what they are trying to do, and ensure fair tax distribution in the digital economy. So this is actually proving to be quite a huge task for this country. So in brief, those are just a summary of our 2024 finance bill. And as an individual, I say, as an individual, I reject it. So please like and share this, because most of the people are discussing what this bill is all about. Most of the people are rejecting, but they have no idea, like they do not have any summary why they are rejecting. Share this video into WhatsApp groups, into other online platforms, and let people actually understand why most of the people in the country are against the implementation of this 2024 finance bill. Please like, share, and subscribe.